and welcome to Startup Street. I'm Ritu Singh, and here are the key headlines from the startup space. Urban Company is set to cut the size of its proposed IPO by 80% because of recent market upheaval. Sources say the company will file papers with SEBI next month to raise 528 crore rupees. The issue will value the company at more than $2.5 billion. Teacher Accreditation EdTech Startup Center raises 20 crore rupees in its Series A1 round, led by Ather Ventures, with participation from existing investor Discovery Assets and angel investors as well. These proceeds will be used to grow in India and other markets and to improve the technology systems. Indian cricketer Jasprit Bumrah has joined luggage brand Uppercase as an investor. Bumrah will expand his role beyond being an endorser and actively contribute to the brand's development. The startup had recently raised $9 million in its Series B round, led by Axel. Moglex, a B2B e-commerce firm, has announced the appointment of Sanjeev Arora as its new Chief Financial Officer. And in this role, Arora will lead the company's financial strategy and operations with a focus on capital planning and advancing its long-term growth journey, including preparations for an IPO. And Mark Zuckerberg takes the witness stand on the first day of a historic antitrust trial in Washington, defends Facebook's parent Meta from allegations of creating an illegal monopoly. The US authorities are seeking to unwind the acquisition of both Instagram and WhatsApp. Well, those are the headlines we're tracking for you today. Now, Swiggy has launched an AI-powered app that is called PYNG, making its entry into the professional services market. The app leverages AI to connect users with verified professionals from more than 100 specializations. Shilpa Ranipeta is here with more details on this story. Shilpa, what does this mean for Swiggy? How is the app going to work?
Well, from ordering food on Swiggy or groceries on its quick commerce platform, there's a new service that has been added. Swiggy has forayed into professional services with the launch of a new standalone app called PYNG now. This is currently live in Bengaluru for offline services, and the platform also offers online access to various services nationwide. Now, what is PYNG? It is an AI-powered professional services marketplace which connects users with over 1,000 professionals across 100+ categories. This is anywhere from health and wellness experts to financial advisors, astrologers, dance teachers, career coaches, and even packers and movers. Now, Swiggy plans to onboard 10,000+ experts across India. Now, how this works is that the app allows users like you and me to chat with AI assistants for personalized recommendations and real-time support, or users can also directly reach out to the professionals that are listed on the platform and either book them directly or have a chat or a 15-minute call with the service provider. Now, the app also gives you access to events, WhatsApp groups, and updates, and is also offering a money-back guarantee if users don't find value in the service that they book. Now, the listing is currently free for the experts with zero commission as a launch offer, but Swiggy is eventually expected to monetize this by charging them for leads. Now, if you look at this, PYNG is a broader play compared to, say, an Urban Company, which focuses mainly on home services. Meanwhile, remember, Blinkit also, which is owned by Zomato, is also eyeing a similar foray into at-home services space. And remember, because of this, Zomato CEO Dipinder Goyal had resigned from Urban Company's board back in 2023. So, professional services and at-home services, that looks like the next big play for the quick commerce industry. Back to you.
Well, yes, we continue to see that trend of quick commerce players expanding into other segments. Shilpa, thanks very much for bringing us that story. Now, here's a CNBC-TV18 exclusive. Ather Energy, we understand, is going to file its RHP very soon. Now, according to sources, the electric two-wheeler maker aims to list on Dalal Street this month itself. Let's go across to Rachna Dhanrajani for more. Rachna, what have you picked up? There's been a bit of back and forth. When will we finally see this listing?
Well, sources have told CNBC-TV18 that Ather Energy is likely to file its RHP soon. Finally, after the months-long delay, it is expected to file it tomorrow, with the company expected to open its IPO subscription on April 23rd. The electric two-wheeler maker is aiming to list by the end of this month. This comes after 2 rounds of updates to its DRHP, which were filed amid volatile market conditions and a weak investor sentiment. And as a result, both the IPO size and valuation have been revised downward, as we have been reporting constantly. Week after week, we have been keeping up with Ather's updates. But now, finally, the IPO size is expected to be in the range of about $350 to $375 million, which is approximately about 2,900 to 3,200 crore rupees, at a post-money valuation of about 12,800 crore rupees, pretty much in line with what we have been reporting for all these weeks.
Yes, Rachna, and thanks very much for bringing us that story. But stay with us. Ather is not the only company to have cut its IPO size amid the volatile market conditions. Tell us about Urban Company, where you've been reporting the proposed IPO could be cut by 80% because of the market upheaval. What's going on there, Rachna?
Well, their sources have told us that home services unicorn, that's Urban Company, has secured a shareholder approval to raise about 528 crore via an IPO. The company will file its DRHP by the end of next month. While the company had initially planned to mop up about 3,000 crore rupees, market volatility has forced a rethink. A pre-IPO placement with select investors may shrink the offer size further. The IPO, which will include a stake sale by existing investors, is expected to value Urban Company at about $2.5 to $2.8 billion, leading the issuer Kotak Mahindra, Goldman Sachs and Morgan Stanley. On the business front, Urban Company reported a 30% jump in FY24 revenue, clocking in at about 827 crore rupees, and losses have also narrowed to just 93 crore from 312 crore in FY23. The company offers a wide range of services as we know it. It goes from home cleaning, repairs, pest control to beauty and wellness, which continue to be its strongest category. In FY23, home services made up nearly 78% of its revenue, with product sales, which now also includes selling native RO purifiers that also contribute to the rest. The company is also diversifying into new categories like wall panels and smart locks, and is currently operational across India, UAE and Singapore.
All right, Rachna, we'll leave it at that. Thanks very much for bringing us both of those stories. Now we'll move on to what else is brewing today. Indian cricketer Jasprit Bumrah has invested an undisclosed amount in sustainable travel gear brand Uppercase. Now Bumrah has been associated with the brand as its ambassador for the last 3 years and will now expand his role beyond being just an endorser and actively contribute to its development. The company says it is going to work closely with the cricketer to create a distinctive product line. For more on this, joining me now is cricketer and investor Jasprit Bumrah and Sudeep Ghosh, who's the MD and founder of Uppercase. Gentlemen, thanks very much for your time here. Jasprit, we know you're in the middle of an IPL, but tell us about this investment. You've been associated with Uppercase in the last 3 years, and now you're coming on board as an investor. What got you to sign the check, and why did you choose to invest in Uppercase?
It's been a good 3-year cycle with Uppercase. I've been happy to be associated with them. We came during the COVID times, and I've seen the brand grow from strength to strength, and the vision that they have is aligned to my vision as well. So yeah, very happy to be associated, and hopefully now I'm more involved in the brand and I've invested in it as well. So it will grow from strength to strength, and we'll accomplish great things together.
Well, Sudeep, let me ask you then, since we didn't get the answer from Jasprit, what is the amount of the investment that he's made? And you'd also recently raised this $9 million in your Series B round. So is this particular investment more strategic in nature, and how will you deploy the money?
Okay, so this is definitely more strategic in nature. Currently, the papers are getting filed in the Ministry of Corporate Affairs, so I'll not be able to disclose it. Of course, it'll get disclosed once filed. But more important is the fact that when a brand ambassador we've been with you for some time, decides to invest in the company, it tells a lot about the organization and the brand that they're doing. We have been knowing each other for the last 3 years, and it was Jasprit's idea, and he came up here and he said he would like to invest, and we were all over the moon, because it kind of gives us a huge pat on the back, saying whatever we're doing must be doing good, because we have personalities like Jasprit who are coming forward and saying, hey, you guys are doing well, let me be part of this journey, not just as a brand ambassador, but somebody who can grow the organization along with you. So that's more important for us.
All right, Sudeep, you plan to use this money to bring out a new line. How will this be different from what you have in your portfolio? And, when you're looking at the pricing strategy, because you're calling this product premium, how will it differ from what you have, and how soon is it going to go on the shelves?
Good question. See, in India, we have our luggages are very generic if you really see. For instance, I'll give an example. I have heard people talking about the fact that there are not good camera bags, for instance. So when we were discussing, Jasprit had very clearly told us that he wants products which are meant for sports people, especially backpacks and gym bags, because he says that we need to carry few things which we usually put it in a regular bag and then we keep looking for it. So we are now planning a product line specifically for sports people. Typically for us, we're an organization who design, develop, and produce here in India. We're a 100% Indian brand, and it takes about anything between 4 to 6 months for the concept to consumer. That's what we say, to reach. So we have already started working, and we expect the product line to hit by end of September, early October. That's where the target is, just before the season or the festive season starts. And when we say premium, we buy our band of operation is in the middle. So premium to our brand, but not premium to some of the premium bags that's available. We want sustainability and fashion and functionality to be available to majority of Indian market, not just
Got it.
And that's always been our plan. We have stores in Sonipat and we have stores in Mall of Asia in Bangalore. So we straddle
Sure.
a larger piece.
Well, Sudeep, a quick word. We're running out of time. But the kind of sales you're currently clocking and the profit margins you have, especially now with this new premium product in the pipeline.
So we are averaging an ARR of about 120 currently. Our gross margins are about 50%, around 50%. So as far as the margins are concerned, we are okay. We do not want to unnecessarily price up and get the product out of reach of consumers. So this will be available for people at a price. But of course, it will not be the cheapest from our stable, but somewhere on the higher side of our spectrum.
All right, Jasprit, finally a question to you as a cricketer and investor. What kind of similarities do you see between cricketing and investing, and the lessons you draw from one that can be applied to the other?
The one thing that I learned from my cricketing career is back your instincts. I've always done that as a player. So even in investing and anything that I do in life, I go with my instinct, and that is what I felt over here as well, that this aligns with my vision, and all of these attributes that they have match to my thought process as well. So it was an easy choice for me to invest in the company, and obviously going further I'll have more inputs of the things that I believe in. So obviously it's a work in progress with both teams coming together. So yeah, hopefully all of this comes to one bigger goal and we achieve that, and lots of success can be achieved.
All right, Jasprit and Steve, we're going to leave it at that. Thanks very much for your time here today on CNBC TV18. We're going to have to slip into a short break on that note, but up next, Spyne secures $16 million in a Series A funding round. We'll put the spotlight on its founder, Sanjay Varnal, on the other side of this break. Stay tuned. Welcome back. You're watching Startup Street. Now, a deep tech platform for the automotive industry, Spyne, has raised $16 million in a Series A funding round that was led by Vertex Ventures. Now, the company says this investment is going to help fuel its growth, focusing on aggressive expansion in the US and developing its next generation AI solutions that are designed to transform automotive retail. For more on what the company's future trajectory looks like and how this capital is going to boost their growth, joining me now is Sanjay Varnwal, who's the co-founder and CEO of Spyne. Sanjay, thanks very much for your time here on Startup Street today. Before we get to that funding, briefly tell us about what you do, because you started out focusing on technology solutions for many industries, e-commerce, food delivery, and whatnot. And then in 2023, you decided to pivot to just the automotive sector. Has that worked out well for you so far? And what is the size of the opportunity you're chasing?
Thank you so much for inviting me on the show, Ritu. Great to be here. So, yes, you said it right. We started the company in 2020 with a goal to help long tail sellers compete with the top brands with the good-looking merchandising that they showcase online, right? So we started catering to all kinds of sellers across food, e-commerce, real estate, automotive, but gradually realized that if you solve for every industry, you'll be average at everything, right? So we wanted to focus on one given sector, and the goal was to build a world-class product that will be, and that will truly do the justice for the clients that we'll be serving, right? So we focused on automotive as a core sector because one, the TAM was big. US, Europe is like massive automotive markets, especially in the pre-owned space. And second, the intent to pay, because the automotive is a large value ticket, right? So the cars typically are sold at about anywhere between $10,000 to $30,000. So the dealers have good intent, right? So that was the intent, and last 2-3 years we have been building only in the automotive.
Well, in that case, tell us about the $16 million funding. How exactly are you going to use this? What will be the priority area for growth?
Look, so I mean, last 2 years have been entirely focused on building the core merchandising solutions for the automotive dealers. Like, so you see, there are big dealers like CarMax in India. You'll have Spyne, Cars24, just to be the equivalent companies of CarMax or Carvanas in the US. But there are hundreds of thousands of smaller dealers which are not able or do not have the kind of resources that they can spend to get those premium visuals, right? So we started with giving them the kind of solution that can help them compete with those bigger companies, the smaller dealers. And after building our solutions deep into this particular market, we realized that there are more gaps that we can fulfill. And the way the AI is transitioning, we are now looking to get into more, how can we make the inventory management more like agentic AI in its approach, right? So inventory management, the marketing, the CRM, all built using new age generative AI. So that's the space that we are now tracing. And the goal is to build the future of automotive retail, right? So you can think of us as a company which is kind of building Shopify for car dealers using generative AI. So that's how we can be pitched, in future.
All right. Your plan is to expand the dealer base as well from 1,500 to 20,000 in the coming years. Just give us a sense of whether the focus will continue to remain on one of your largest markets, that is the US, even in the current environment, talks of a recession and whatnot. What sort of trends are you seeing on ground there, and will you continue to double down on that geography?
Yeah, absolutely. I mean, this current tariff issue has, in fact, proven to be a boon for us because the used car transaction is going to go up. Production of new cars is going to be impacted. That's where dealers are doubling down on transaction of the used cars right now in the market. And you see, in the US and Europe, there are close to 80,000, 100,000 dealers. And we are talking about right now, we are just working with about 1,500 odd dealers. Next 2-3 years, we can have a real shot to get to about 8,000 to 10,000 dealers that we are tracking right now. Every month, we are adding about 100 to 150 dealers right now on our platform. So at the current rate itself, we'll be able to get to 3,000-4,000 dealers by end of the year. And next 2-3 years, the goal is to get to closer to like 10 to 15,000 odd dealers in the ecosystem. Yeah.
All right. So you don't see a hidden demand because of what's happening in the US right now? Also in the past 15 months, you claim to have seen a 5 times growth and you're targeting a 3x revenue increase in the current financial year. Give us what this means in terms of absolute numbers, and what kind of profit are you looking to clock in the coming year or so?
Yeah, so we are a high gross margin business. So we run at about 85-86% of gross margin. SaaS, right? True SaaS, built using AI. So, of course, because the market is deep and the product market fit is fully established in the US dealership segment, so we were able to clock that particular growth 5x, as you just mentioned. We are in the later side of the single-digit ARR right now, and within this year we'll be targeting to go at least like to 3x of the number that we are doing right now, right? So. And we are on track. So it is based on the current velocity that we are doing, we should be fine hitting about 3x of the revenue that we are doing right now.
All right, Sanjay, we'll keep a track of that and hopefully have you back later as and when you have more updates. Thanks very much for your time here today on CNBC-TV18.
Thank you so much for inviting us. Thank you.
Well, with obesity rising sharply in India and global weight loss drugs like Ozempic grabbing headlines, a Mumbai-based startup claims it has a natural, affordable alternative, and that it claims is backed by clinical trials. My colleague Aishwarya Anand gets us that story.
Obesity in India has become a silent epidemic. According to National Family Health Survey, nearly 24% of women and 23% men in India are obese, indicating a public health crisis. At the same time, GLP-1 based drugs such as Ozempic have become a global phenomenon where they are promising rapid weight loss. However, risks such as side effects, shortage of supply and high price point have led to consumers wanting some alternative sustainable solutions. Enter Mumbai-based gut health startup, The Good Bug, which has launched a natural GLP-1 based drug called Metabolically Lean, which promises the weight loss journey for consumers without the side effects or the risks involved with pharmaceutical interventions. I'm here at Startup Mahakumbh to get a sense of what this means amidst the whole debate around a GLP-1 drug. How does it compare to the pharmaceutical drugs that are available in the market?
In our R&D, we've been carrying out pharma grade sort of clinical trials. We've always been a very science first company and business. So, we do randomized, double-blinded, placebo-controlled sort of trials. And with the composition that we've put together using probiotics and prebiotics, we've sort of really naturally built a GLP-1 play that helps sort of regulate appetite, which sort of then puts you into a calorie deficit and helps you lose weight. And not only weight, but benefits across, body circumference, BMI, HbA1c levels, lipid markers. So this is a natural composition that we've put together to deliver similar outcomes, which has been validated and clinically proven through our clinical trials, giving 12% weight loss in 90 days.
Prabhu, coming to you, just help me understand, how do you think this will define India's weight loss industry?
The new age GLP-1 drugs that they're launching in the market are way, way, way high priced compared to anything that can happen. And of course, they come with a whole bunch of side effects, and it is prescription. It is prescription for a reason, because of the issues that come with it. We think this solves for a whole lot of accessibility, because we're far more, a 3 months regimen at something like a 4,999. It opens out a large consumer base, and we think that that is a big difference that will make to the Indian obesity drive.
This clinical data is currently under external peer review and is expected to get published in the Curious Journal of Medical Science. According to the preprint of the study shared with CNBC-TV18, the clinical trial was conducted on 106 patients, of which 53 were on placebo and 53 on metabolically lean. The study shows that patients witnessed weight reduction of 10.3 kg using metabolically lean versus 3.1 kg while being on placebo. As per Dr. M.K.N. Manohar, senior consultant at Manipal Hospitals and the trial's principal investigator, what stood out was the self-reported drop in cravings and improved satiety.
When we tested, we got heartening results like weight reduction about 12%, about 9% waist circumference reduction, total body fat reduction more than 24% over a period of 3 months. What was heartening is hardly any side effect because it is a probiotic and fiber, and acceptance was good. We also studied the mental well-being, gastrointestinal scale, and stress relief factors as per the standard scales which is used in all the clinical trials. And we found it to be very, very favorable in people who are using our product. In the trial, we took the set of patients who are having a BMI of 30 to 40. We excluded people who had or on other weight form therapies. We also excluded people who are uncontrolled diabetic, hypertensives, and so on. So these things are not strictly possible in the real world. Having said that, we have already discussed in our plans to have a real world data also. We will identify researchers who are willing to participate in these trials, real world evidence, to see whether we can match up. Sometimes we can even outdo what we have found in the trial.
Available at 2,000 rupees per month or 5,000 rupees for 3 months, the Goodbug solution, which is FSSAI approved, is accessible via online platforms and retail stores.
In terms of average order value, today we operate at about 1,300 to 1,400 rupees on our own website. But our products start at a price point of about, 400 rupees on our website.
With clinical trials showing over 10 kg of weight loss in 90 days and a price point far below pharmaceutical GLP-1 drugs like Wegovy, Ozempic or Mounjaro, could the big bugs metabolically lean mark the beginning of a new, more accessible chapter in India's weight loss journey, or will questions around long-term efficacy and regulatory oversight still hold sway? With camera person Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
All right, on that note, it's a wrap on this edition of Startup Street. Thanks very much for watching. With more news and updates, we'll continue on the other side. Stay tuned.